Welcome to the Uzziah Show. I am your host, Uzziah, your success strategist. And if you have any questions about your business, career, or finances, then this is the show for you. Welcome. Guys, I'm excited because tonight we're going to talk about how rich people avoid paying taxes. If you've ever wondered how the rich make so much money, but they don't have to pay Uncle Sam, I'm going to give you the steps on tonight's broadcast. All I need y'all to do is smash that thumbs up button and leave me a comment below to let me know that you're here. Now, if this is your first time on this show, welcome. My name is Uzziah. I'm a professional business consultant, and my job is to help you get out of debt so you can start your own business. And tonight, I want to talk about one of the most important factors when it comes to building wealth. You being able to limit your taxes legally so that way you can keep the money in your pocket and not somebody else's. Okay. So if you guys are excited to learn about how to be able to do this, please leave me a comment below. Let me know your name, the city that you're from, so I can shout you out and show you a lot of love. I see you in the house. Cecil, shout out to the Philippines. Philippines is in the house. Really excited to be able to talk about this on tonight's broadcast. So why don't we go ahead and hop in? For those of you guys that want to see this show continue to stay on air, please make sure that you donate. All you need to do is tap that dollar icon directly below the live chat box in order to make your sponsorship donation. Whoever has the highest sponsorship for tonight's broadcast will be the official sponsor. So with no further ado, let's talk about 5 key ways to avoid paying taxes. How can you legally avoid paying taxes? Because did you know that working class people who have employment income, they get taxed the hardest? People that work at a 9-to-5 job, employees, they have the most taxable forms of income. That's the reason why when you see guys like Donald Trump and other big companies like Amazon or General Electric not show that they owe any money to the IRS, it's because they understand that some forms of income are more taxable than others. And this society is designed to tax you the most. The working class person, the person that has to, get up every single day and make your morning commute, you as the employee pay the bill. And today I want to show you how to avoid that. The first way that you can avoid paying taxes like the top 1% is to start your own business. Look at some of the richest people in the world, guys. Jeff Bezos, Warren Buffett, Elon Musk. What do they all have in common? They're business owners. They understand that businesses are structured in a way that creates long-term wealth. Business ownership allows you to create exponential wealth. You're not going to get that by working at a 9-to-5. I always tell you guys, you could work 50 times harder at your job, but that doesn't mean you're going to walk away with a 50x salary. You are always going to be capped at a fixed rate. But when you are a business owner, not only can you control your own means of income, you can also limit your tax burden. And the way that you're able to not have to pay taxes is by having tax write-off for your business expenses. This is one of the key things that wealthy people do to make sure that they don't owe Uncle Sam. So let's talk about some of the things that rich people tend to write off on their tax bill. Prime example, food. A lot of wealthy people save more money by going out to eat rather than getting groceries and cooking because they know if they go to a restaurant, they can write it off. As long as they say, hey, I'm at a business meeting, they invite somebody else along with them that's a business partner, they're talking about a business deal, they can write that off and get a significant deduction. You always want to think about some of the opportunities that you have to be able to save your money. Guys, it's not about how much money you make. It's about how much money you keep. And you need to make sure that anytime you use your business, you need to use your business so that way you can make money and keep the money by lowering all of your tax expenses. Now, I'm seeing a lot of comments. Shout out to all of y'all that are in the house. Shout out to my sister Eliana. Good to see you on, sis. First time seeing you on, sis. Welcome, 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 welcome. J Man Oh Man says, is that because they fill out the W-4 incorrect? No, they're legally lowering their taxes because they understand what write-offs they can use for their own benefit. Okay, everything that I'm showing y'all tonight is perfectly legal. It's not cooking the books. It's not going against the laws or the tax code. This is what the top 1% knows that everyone else doesn't. This is how wealthy people are able to limit their tax burden year after year, which is why you always hear politicians talk about taxing the rich. One of the reasons why they always talk about taxing the rich is not just because they make the most money, it's because they know the savviest ways of keeping money in their pocket. They make the money and they keep a lot of it because they know how to get around the tax system. The average middle class person does not know how to get around the tax system. The average middle class person thinks that they're getting free money from the government whenever they get a tax return, when in actuality, your tax refund is the amount of money that you allowed the IRS to borrow all year. When you get a tax refund, IRS is just sending you back money that you let them hold all year long. So think about how whenever you get your paychecks at your 9 to 5, think about how when you see the paycheck stub, it will always tell you your paycheck minus taxes, minus Social Security, minus Medicare, all these different things. Before money goes into your bank account, it goes to other institutions. But business owners, they make their own money before everyone else has their handout getting taxed. So I want you guys to consider not all money is the same money. My business money was not the same as my 9 to 5 money. My 9 to 5 money is not the same as my real estate investment money that I make through passive income. You need to understand all of these different types of income streams have different tax codes. And one of the reasons why the wealthiest people in the world own businesses is because entrepreneurship is one of the best tax vehicles that you can ever have. When you have your own business set up, you can start doing all of these business write-offs where you can spend money on things like travel, food, technology, insurance. You can buy all of these different things that you're going to end up buying anyway, but you can filter it under your business. And the more that you're able to deduct from your taxes, the more money you can save. The more money that you can deduct from your business write-offs, the less money will be taken away by the government. You must understand, one of the biggest threats to you creating generational wealth is taxes. So you got to understand how to avoid your tax burdens. This is another one of the reasons why the average millionaire owns 7 different streams of income, because they understand that some of those different income streams are better streams when it comes to lowering their taxes versus if they were only getting it through one stream, especially at a 9 to 5. Okay. So the first way that you can hack your taxes is through your business write-offs. Another way that you could use your business to be able to hack taxes is by reinvesting the money. Guys, one of the worst things that you can do is hold on to a lot of cash. Because whenever you take cash out of things, it always comes with a lot of taxes. We're going to be spending some time tonight talking about things like capital gains taxes. I'm not going to go into it and be super boring. I'm just going to break it down at a very easy level so you know how to handle this. If you run a business right now, one of the best things for you to do is to not pull all of the money from your business, but for you to have another income stream set up that just covers your bills. And the money that you make from your business, you reinvest that money as much as you can. The more money that you make from your business and pull out, the more is going towards you owing the IRS in taxes. That's the reason why a lot of times when you look at CEOs of big companies, guys will be billionaires, but they won't take out a lot of money in their salary. Have you ever noticed how there will be guys like Warren Buffett, who was worth multiple billions of dollars, but they don't walk away with a salary of billions of dollars per year because they understand they're going to lose a lot of it in taxes. Better for you to make the money through the business and just hold it in that account rather than you taking it all out of the account in cash and then you end up losing it. And one of the biggest things that is going to take us to the second point on how the wealthy avoid taxes is by you owning multiple assets and keeping your money there. You know, if you've been on this broadcast, you always hear me talk about the importance of investing in real estate, making sure that you have a 401k and a Roth IRA. The reason why I'm always stressing these investment vehicles is because these are some of the easiest ways that you can build wealth and reduce your taxes. So if you have a 401k, for example, if you have a 401k, you're able to make investments tax deferred. You don't have to pay taxes on the money now that you invest. It can sit in the account and you can get interest in that account tax-free all the way up until your retirement. That's through a traditional 401k. Or you could have a Roth 401k where all you do is you just pay a little bit on it right now. Okay. You just pay a little bit of tax on your 401k contribution right now. And then once you get retirement age, like 65, all of the money that you saved for all of those years, you can pull that money out tax free. So, say, for example, you start investing into a Roth 401k in your 20s. A lot of you guys have jobs that offer this. If you make a $50 contribution into your Roth 401k account every month for the next 30 to 40 years, by the time that you pull that money out, whatever amount of money that you have, you will be able to walk away with that money without owing the government. You need to start making sure that you start getting these tax deferred investments. You want to make sure that these investment accounts give you good tax benefits, because if you just get any type of account, you're going to end up paying more money. You know, I was talking to one of my friends about this not too long ago. He was saying, well, why is it that people take their money and they put it into a 401k that they can't touch versus just opening a standard investing account where you could take money in and pull money out at any time? How is it that people put more of their money into a retirement account rather than just any regular investment account? And I told him it's because of the fact that any regular investing account comes with higher taxes. There are different tax codes and regulations behind all of these different accounts. Without me having to bore you and you having to be a financial geek, all I'm going to tell you is this is the reason why I always say, if you're working at a 9-to-5 job that offers a 401k, you are leaving money on the table for not using it. Not only are they giving you an account that gives tax benefits, They're also matching your investment up to a certain amount. So whatever amount of money that you put in, they're going to put in that exact same amount of money up to a certain point, all for free. You can double your money through your job for free. So guys, let's talk about this, okay? How many of you guys, and I'm just asking just by a show of questions, how many of you guys are doing things right now that's helping you avoid taxes? How many of you guys are doing things right now like investing in a 401k, starting up a business that allows you to be able to reduce how much you own, Uncle Sam? If you don't know anything about this and you know that you're not tapping into lowering your taxes, tap one. If you already have a system to legally reduce your tax burden, press two. I'm trying to give y'all all this information so that way you can build your households. This is also that way you can have generational wealth for you and your family. These are things that the elites know. These are things that the top 1% of people in the world know. And as I'm looking in the comments, there are a lot of people that know that the top 1% know certain secrets about taxes that others don't, but they haven't learned what those secrets are and how they can delve into them today. Listen, guys, you don't have to be rich to manage your money like rich people. You don't have to be wealthy in order to limit your taxes like wealthy people do. All you need to know is how they play the game. So, the first step on this is owning a business and then using business write offs and reinvesting your business money. That ties into the second thing that I'm talking about, which is make sure that you own and control assets that you hold on to for life so that you don't have to pay capital gains. How many of you guys have heard that if you pull money out of your 401k or IRA before your retirement age, you take on a penalty from the IRS? The reason why the IRS is going to hit you with a penalty is because there's certain gains that you're making on that money that the IRS does not want you to receive in cash until you have retired. Some of these different accounts give different benefits, and that's the reason why the IRS is going to hit you hard if you pull the money out too early. This is why you guys need to know the difference between a 401k, an IRA, a regular brokerage account. These things matter. But the reason why I'm telling you to invest and hold the money is because when you pull the money out, it will come at a tax. So if I were to sell this house, I always tell you guys that when I bought my first real estate investment property in Austin, I bought the property for $230K. The property now is valued at over $500K. But if I were to go on the real estate market and try to sell this property, I'm going to have to pay a lot of capital gains taxes because the tax man is going to know how much money I made from this investment. So rather than me selling it, I'm holding on to it for as long as possible while having tenants cover the mortgage. You want to make sure that when you start building your assets, you don't just pull the money out just for random stuff. Like you should not be putting money into all these different investing accounts just so you could pull the money out and buy clothes. You want to make sure that when you start building your assets, you have these investment accounts that you could just buy and hold. And then you can have other kinds of income streams that cover all of your bills. So again, there's the 401k that comes through your job. If you're an entrepreneur, you can still have what's called a solo 401k. Also, you can have a IRA. This is something that you would just set up with a company like Vanguard or TD Ameritrade. An IRA is an investment retirement account that allows you to put money into your retirement without having to go through a 9 to 5 job. You will just set up your own private account with one of the big brokerage companies, and then you can put in as little as $50 a month to invest in your retirement. This is so important, guys, because some of you guys have probably heard about how if you start investing as early as possible, a small amount of money will compound into massive gains. Don't think that you got to put in $500 a month in order to be wealthy. There have been stories about people who have never made more than $50,000 a year who retired as millionaires, all because they did the things that I'm telling you to do on tonight's broadcast. So if you guys are getting a lot of value out of tonight's content, please make sure that you like this channel. Make sure that you like this video, guys, because that'll go a long way in telling YouTube to send this out to more people so that we can level up. And also, please make sure that you donate. Okay, let's get these sponsorships rolling. If you guys are getting some powerful information that can help to change your life, all I ask is that you give back. Just tap the dollar icon directly below. Any donation will go a very long way. And even if you guys like using Cash App or PayPal, the information is on the screen and the links are in the description below. So we talked about the importance of owning a business, right? You don't even have to make a lot of money from the business. You just need to make sure that you have some type of business entity like an LLC filed, so that you can have a legal way of writing off your expenses. Now, guys, you need to make sure that you're smart about this. So I highly recommend that you consult with a tax attorney. Do not start getting crazy and try to buy up retail stores saying, I'm going to buy all of these clothes and I'm just going to put it on a business write-off. Because if you ever end up getting audited, one of the first things that an auditor is going to ask is, are you using these clothes at any other time outside of your business? Sometimes if you guys buy things where you're just using it for personal rather than business, the IRS can come down on you. Even if you try to buy a car as a business write-off, you're always trying to think about ways that you can save money. The goal of investing like the top 1% is so that you can avoid taxes. But one of the things that an IRS auditor would do is they'll look and see your car and say, okay, well, is this car just for business purposes only? Or are you using this car for everyday use? You need to make sure that you consult with an accountant to say, hey, I'm thinking about finding some really good ways where I could take some of my expenses and start writing them off. What are some of the things that you would suggest? And your accountant will have an entire list of different things that will count as deductible expenses that you can start brainstorming so you can take advantages of all of these opportunities. Does that make sense, guys? Some of you guys like eating out a lot. If you already like eating out with people, you could use that as a business write-off. Some of you guys maybe work from home and you have certain expenses. You can take some of the expenses that you use for your home office and turn that into a write-off. Even for some of you guys that may be working remotely, you could set up a side business and you could use some of the payments for your internet along with other bills towards that being a business write-off. These are all ways that you can make and save some extra money. I also told about you guys setting up different assets, 401k, IRA, real estate property. You need to have assets that you buy and hold for the rest of your life. Let's be clear. Our goal here is creating an empire. Our job is to build generational wealth. So if you want to have generational wealth that you can pass down onto future generations, you need to stop treating every income stream as the lifeblood that's going to cover your day to day. You need to always be clear about which income streams are going to cover my necessities and which investment accounts will cover the wealth for my family to create. The wealth for your family, you don't touch that money. You just put money there, park it, and hold it, and then it can go from one generation to the next. This is the reason why you'll see families like the Rockefellers and others pass money down from generation to generation because they already have different accounts to make sure that the wealth stays from multiple lifetimes. See, the problem is, guys, and I'm going to go into this a little bit later on this broadcast, most people don't realize that wealthy households are taxed up to 45% once the rich person dies. A wealthy person can be taxed by up to 50% as a part of their estate. So, this is the reason why you'll see wealthy people do things like estate planning and other things, because even if you have a lot of money set aside, if you don't know the right accounts to put them in, Uncle Sam will take a lot of it, and it's not enough to make the money. It's not about how much money you make. It's about how much money you keep. So you need to make sure that you have all of this in mind as you plan for your future. I don't know about you guys, but I don't want to work myself into the ground just for the government to get paid. So the average American adult, throughout the course of their entire adult career, half of all of their income will go towards Uncle Sam. Throughout the average adult's working lifetime, half of their checks will go to Uncle Sam and they won't even know it, because we're so used to the direct deposit. We're so used to just living in this culture where we'll get a pay stub and we know that the money is coming out, but we're not adding up all of the expenses. But what if you were able to take all of that money that was going towards the taxes and you could hold on to a large portion of it yourself? If you follow what I was just saying, that means that you could actually have 20 plus years worth of income right there. So you guys got to make sure that you stay on top of this tax thing, man. Let me start looking at some of these comments. I'm going to put the link for y'all to cam up. I really just don't want to just be on here babbling on. Y'all know I like to make this thing interactive. So please make sure that you click that link to cam up and talk with me about how you plan to lower your tax bill. Now, again, I'm going to keep stressing this. Everything that I'm telling you on tonight's broadcast is how to legally avoid taxes. I'm not saying anything on here that's going against the law. I do not condone the breaking of the law to avoid taxes. A lot of y'all done heard about situations like Wesley Snipes, how he went through a certain hangup when it came to dodging taxes. Everything that I'm telling y'all right now is according to the tax system. Go to your accountant. They will tell you that everything that I'm kicking to y'all in tonight's broadcast, this is what wealthy people do. And this is the reason why, guys, every time these politicians are put in office, whenever they talk about taxing the rich, they really don't come after all of the wealthy people's wealth. They don't come after all of their money. Why? Because most of the time, whenever politicians and presidents talk about taxing the rich, they're only talking about taxing a person's income. But wealthy people are wise enough to understand that the majority of their finances are not coming from their salary. The majority of their finances are locked into other things: real estate, 401k, IRA, everything that I'm breaking down right here. These are all things that you can create. You can set up a 401k plan right now. So don't think that you got to wait until you're wealthy to get started. If you guys have any questions, feel free to leave a comment. I want to help you guys to the best of my ability. I do want to point out here, I keep stressing, go and speak with a tax accountant about it. I think this is honestly perfect timing because as we get into the 2022 calendar year, you guys are going to have to file taxes anyway. So whenever you guys go to whoever you file your taxes with, just start to tell them, hey, you know what? I think this year is the year that I want to start a business. Can you tell me how I can legally start to get write-offs for some of my expenses? Start to have the conversation. The third point that I want to share with you guys on how to avoid taxes is to move to a location where taxes are limited. Many of you guys are unaware that I live in a state that has no federal state taxes. In the state of Texas, there's no state taxes. But guys, guess what? I came from California, and California has one of the highest state taxes in the United States. So just by me moving from one state to the next, I was able to save money. You guys got to start looking into these different things. When you guys spend money right now on things like rent and mortgage, you need to ask yourself, what's my cost of living like being located here versus being somewhere else? If I decided to take all of this money that I'm making right now and move to another state, how much farther could I stretch my money? When I live in Texas, I don't have to worry about state taxes, but one of the things that are a little pricey is property taxes. So I'm always thinking about finding an ideal location in Texas or anywhere else that I move because I want to be able to avoid as many taxes as possible. This is the reason why so many retired people move to the state of Florida. Have y'all ever noticed that? The reason why so many retirees will move to Florida is because they know that taxes will eat up their retirement accounts. The job is not to give away all the money. The job is for you to be able to hold on the money so that way you can have something to provide to you and your family. So you want to make sure that not only do you have your own business, whether part-time or full-time, to get your tax write-offs, you also want to make sure that you move to a location that lowers your tax burden. Number 4, I want you guys to start thinking about different forms of compensation. Okay. Some of you guys might still be stuck on, I got to make all of my money through a 9 to 5. I want you guys to realize right now that federal taxes on investment income are lower than the taxes that you pay after getting a check at a 9 to 5 job. I'm telling you guys that if all you have is an investment account and maybe you start getting dividends on that, sometimes people do this in the stock market. Your tax burden from your investment accounts that gives you passive income every month is lower than the amount of taxes that you would have to pay by actively working 40 hours a week. You can actually pay less taxes by not working at all than the amount of taxes that you have to pay as a hard-working American citizen. These are all of the tax loopholes that you guys need to know. This is, again, one of the reasons why the average millionaire has 7 different streams of income. It's not just because if one income stream goes south, they still got a lot of other income streams sewn up. One of the reasons why they do this is because they know not all money is taxed the same. So I want you guys to start thinking about, man, should I actually have an investment account where I could just make passive income every month? Should I start looking into stocks where I can make dividend money? Why am I working myself so hard into the ground at a 9 to 5 and I'm getting taxed at the highest rate? Where if all I did was take a certain portion of my money that I got every paycheck and started putting it into some of my investing accounts, this could actually grow into a passive stream of income that would allow me to make money with ease while also lowering my tax burden. I want you guys to start thinking about new ways of making income. I make income through real estate. I get paid from my tenants every month. I get paid from my business. When I was at the 9 to 5, I used to get paid from the 9 to 5. But again, not all money is the same. Okay. Even when I make content here on YouTube, shout out to the brother Malkia. Good to see you on as always, King. Shout out to you. Even when I'm on YouTube, this comes in the form of a royalty, because even if I'm not making new content, YouTube will still pay me for the content that I've done in years past, because people are still watching those videos and I'm getting paid through YouTube ads. So whenever I have to write this off, this is going to be different from employment income. I'm showing you guys there's all these different kinds of tax codes flying around. And Malkia, you notice there's all kinds of laws set up behind all these different things. It's time that we learn what these things are so that way we really know the game. So one of the things that I want you guys to focus on right now is, instead of you always getting paid through a salary, start to look for opportunities where you can get paid through equity. See, one of the things that makes real estate so powerful for me is that I'm not only able to build wealth through monthly rental income, I'm also able to build wealth through equity. I have hundreds of thousands of dollars in equity on my real estate investment, but I don't get taxed as though that's a salary that's coming to me every year. This is a part of my net worth, guys. When you hear people talking about how much money they make and how much money they're worth, they're adding in all of their assets to the equation. And the thing that y'all got to understand about wealthy people is that wealthy people only keep a small percentage of all of their finances in cash. They put the majority of all of their funds into other assets that are not liquid, because they're not going to get taxed the same as somebody that has a regular salary. Sometimes you want to start looking for opportunities where you can get equity into something instead of an income. So say, for example, you want to go into a business, right? If you want to be a business owner, stop just thinking about making money from the business through an income. Start looking for business opportunities to say, hey, if I work hard on this business with you, can I have equity ownership? That way, the IRS cannot tax you for making a certain amount of money. But if the business is worth a certain amount of money, then that means that you are worth a certain amount of money. And if you needed to pull the money out of the business, then you could do it. But if you've got other streams of income set up for your day-to-day expenses, then all you need to do is just tuck that money away into your business, and it still contributes to your net worth without you being taxed on high levels. This is how the rich are able to do it, guys. When you look at guys like Donald Trump, this guy is a multi-billionaire, and people will talk about him not paying taxes. The honest truth is that he will pay taxes because he still has staff. So he's still subject to payroll taxes. But again, it's better for him to pay taxes the way that he does, because at least when he's paying taxes, he's only paying taxes because he has other employees to do the work for him. When you pay taxes, you have to pay those taxes at the highest amount, and you have to do all of the work yourself. Okay. So these are all the different opportunities that are out there, guys. Like I said, I'm not going to throw it all out at you for tonight. I know that we're getting ready for the week, but I think this is a very important topic. When we talk about the subject of building income and creating generational wealth, it's important to realize how rich people are able to avoid paying taxes. The fifth and final thing that I want you guys to think about is charitable donations. When you make charitable donations, that charitable donation is not taxable. This is the reason why whenever you go and donate items to Goodwill, they always give you a tax receipt. This is the reason why, man, you'll see different wealthy people with foundations. You're able to be able to give back to nonprofits without you having to be subject to so many taxes. So there's, okay, a lot of people don't run into this problem now, but you'll thank me for telling you this later. If you stay working hard on all the things that I tell you guys to do on this channel, one day you may find yourself at a point where you have to start spending money, because if you keep too much money to yourself in cash, the IRS is going to tax it from you. You're going to have to get on a use it or lose it mentality. So when you start doing the accounting and you're going to speak with an accountant, your accountant should be able to tell you, hey, this is how much money you need to start spending, because it's actually going to be more expensive for you to hold on to this money versus if you actually used it to buy different things that could help you make even more. So let me give you guys an example. How many of you guys have ever worked at a company where they may have had a certain annual budget and they were constantly tell you guys to find something to spend it on? I know Ariel can relate to this. How many of you guys have ever worked at a company? Maybe for some of you guys, it was in corporate America, and there may have been like a travel account. It may have been an equipment account. There may have been some kind of budget that the company had in place where at the end of the third quarter, if all that money wasn't spent, they wanted you to go out and spend the money for them. They were just saying, hey, go spend it on this, go spend it on that. This is the reason why a lot of times companies will give you per diem and other things, because they realize they're making so much money per year that if they don't spend the money, then the IRS will get it. So say, for example, some of you guys are entrepreneurs. You run a business where you're making a lot of money in annual revenue. Instead of you just clocking all that revenue and having to pay taxes on it, instead, what you could do is you could buy a new computer so that way you could do a better stream. You could hire more employees so that way you can reduce your tax burden. Instead of, you're going to lose the money anyway. Instead of it being a complete loss by giving it to Uncle Sam, because he's not trying to put no more money into your pocket, you take that exact same money that the IRS would have pulled from you and you invest it into your company towards a product or a tool that will allow you to make more money from that purchase. Okay, more supplies, better equipment. For some of you guys, you need better transportation vehicles. These things will help you guys get ahead further, and this is all the stuff that you can do to work the tax game. So the brother Malkia said, I decided to become an independent contractor because of the taxation game that is played with a 9-to-5. Shout out to you. This is what I'm trying to tell him. Your 9-to-5 income is the most taxable form of income. That's the reason why you'll have highly skilled people look into different contracting positions where they don't get paid through a W-2, but a 1099. And a lot of independent contractors, they'll make higher amounts of money than somebody that's on an annual salary. And they focus on being able to pocket that money more because they understand that the taxes are different. Malkia said, I used to make $18 an hour, but they took out $175 each paycheck, not including the tax I had to pay at the end of the year. I realized I was really making minimum wage. All that stopped because he started doing tax write-offs. Y'all see? So you got to start looking at, how do I work smarter, not harder? How do I allow my money to stretch a little bit further than it is today? One of the ways that you can do this is by giving to charity. If you know that there are certain organizations that you already want to be dedicated to, one of the best ways for you to be able to use the money the way that you want to use it without it going to Uncle Sam is by giving it to the charitable organization, because not only is money donated to charity not taxable, you can also use your gifts receipts during tax seasons, and you can get money back from that with a tax refund. This is the reason why you will see the Bill and Melinda Gates Foundation have all of these billionaires chipping in, is because they realize that even when they give so much of their money to the foundation, that money is not being taxed, plus a certain portion is going to come back to them because they can write it off. You always want to be thinking write-offs, guys. Write off, write off, write off, write off, write off, write off, write off. See, one of the reasons why 9 to 5 income is taxed the most is because you cannot write off anything against it. So, for example, let's say I'm running my business, I'm a content creator. If I buy this phone, I could get a tax write-off on this because I know that I'm getting this phone specifically with the intent to record high quality content. So instead of me just being, like a regular person, and I spend $1,000 on getting an iPhone, I could have the exact same desire to get an iPhone as anybody else, but I have a business that makes it more affordable. And you could do this so many times over, guys. You just need to get started. The last thing that I'm going to hit y'all with on tonight's broadcast is knowing this is a bonus for y'all. Okay. Remember how I was telling y'all earlier about how people that are wealthy can end up losing a lot of it? This is the reason why you want to set up a trust for your family. If you ever end up being worth millions of dollars, you could lose up to 45% of all of your money to the federal government, because when you pass away, as that money is being transferred down to your children, the IRS will require an estate tax. This is the reason why sometimes, if you guys have ever heard about gift taxes, you can give a person a gift up to a certain amount for free, non-taxable, as long as you don't go beyond the limit. There are tax regulations for all of these things. And the thing that I'm trying to tell you guys is, we're all going to spend money, but some of us can do it in a wiser way, because sometimes we can work the tax system to our benefit versus falling into what the tax man wants us to do. The tax man wants us to be ignorant. He doesn't want us to know his codes and his laws. He wants us to be able to go about spending things in the most expensive way possible, so that way all of the money goes towards building the streets and the highways. Wouldn't you rather the money come back to you? It's great that you're such a honest tax-paying citizen, and shout out to you. But wouldn't you mind just a little bit more money coming into your pocket? These are the ways to do it. You first start off by setting up a business. You start getting the write-offs, you reinvest the money back into your business accounts, okay? Stop pulling all of the money and just using it for, your own personal recreation. Second thing, when you start having assets, hold on to them, because if you pull money out of it, you can be subject to taxes from capital gains. This is the reason I'm always stressing 401k, IRA. This is the reason why when I own real estate, I try to hold on to it for as long as possible, so that way I can reap all of the earnings and not have to get hit with the tax expenses. I told you guys also, move somewhere that is not as taxed. If you guys are living in New York, California, all these different expensive places, you're going to be hit with taxes hard. So you want to start saying, okay, it's not always about how do I make more money. Sometimes it's about how do I take the money that I'm already making and just make it go farther. Maybe it may be moving. Maybe it's setting up a business. Maybe it's all kinds of things. I'm just showing you guys all the ways to do it. Number 4, start looking for other forms of payment. It doesn't always need to be in salary. You can receive equity. This is the reason why for a lot of you guys that are in corporate America, if you guys are 6-figure earners, one of the things that you'll start to realize is the higher that you climb up the corporate ladder, they're not just going to give you income. They're also going to give you guys stock options. And the reason why they're doing that is because they're able to give you more money without having to distribute it in the form of cash. You can actually be worth more by being able to get different means of money without taking cash income. Shout out to my sister Pecloria. So good to have you on, my sister. Thank you for the first super chat of the evening. Really appreciate you, my sister. For those of y'all that are on tonight, we're talking about how rich people avoid taxes. I've been walking you through 6 different ways on how the top 1% is able to reduce their tax burden legally. Everything that I'm telling you guys are legal ways of being able to cut down your tax bill. And this is important because the average person will spend their adult working lives giving half of their income to the IRS. A lot of us are putting in a lot of hours at our jobs and don't realize that up to 50% of all of that money is going to Uncle Sam. So instead of always thinking about making more money, which just means more taxes, start getting in the habit of reducing your taxes today. So that way, as you make more money over time, you know the best ways to go about doing it. So that way you're not subject to as much during tax season. Again, I told you guys, a lot of y'all be getting geeked up when it's time for your tax refunds. But a lot of y'all don't understand the IRS is giving you back your money. You lent them money when you went out to work for the company all throughout the year, and they were deducting excess money out of your paycheck. When you get a tax refund, 9 times out of 10, for you guys that are getting thousands of dollars back, that's because you are giving the IRS excess money every time you get paid. When you go at your job, you're working for the IRS. So what I'm telling you guys is you need to start figuring out how you can change your tax situation where instead of you getting so much money back during tax season, you're getting what you're owed throughout the entire year. Because most of us, whenever we get that money back in the taxes, we think it's free money and we spend it on BS. We don't realize that's money that you've been working hard for all year. But Uncle Sam is never going to tell you he held your money. He's going to make you think that he's doing you a favor. Look at the same thing with the banks. The banks make you think that they're doing you a favor by holding your money, but they're taking your money and making money off of it by loaning it out to other people. Everybody is getting over on you, but you. And that's the reason why I'm trying to show y'all how to level up. If we're going to work hard out here and we're going to have something important to be able to pass down to our kids, we need to make sure, guys, that we are reaping the fruits of our labor. So before anybody else does, you need to focus on how you can do this on your own. This is the reason why I'm telling you guys the importance of having a trust. This is the reason why I'm telling you guys about the importance of making sure that you live in a location that doesn't come with many taxes. This is the reason why I'm telling you guys about the importance of write-offs and having multiple assets where your only job is just to buy and hold. You buy and build it up. You don't take money out of it. Wealthy people do not hold on to a lot of money in cash because they understand that's how they get took. When politicians talk about taking money from the rich and taxing them, they're talking about the amount of taxable income that comes through cash income. When they get paid cash money, the people that are out here with all these high salaries, like $500,000 a year and more that they take in a salary, they're put in a different tax bracket. But if you can take the majority of your money and put it towards assets, you can still keep your tax burden lower and not get taxed as hard like most people do. So those are the secrets of the top 1%, guys. And hopefully you guys got a lot out of tonight's broadcast. So do you have any questions about this before we get out of here? Sis Gloria says, yes, I tell everyone I'd rather make money throughout the year versus wait for one check during tax season. That's one of the biggest cons that they got over on us. We always be thinking, oh man, tax season, I'm about to get so much money back. I'm excited. We always think that we're getting one over when the system is getting one over on us. There's a reason why they don't teach you guys how to start businesses in school. There's a reason why you have never taken a class in college about all the ways that you can get tax benefits. There's a reason why you guys haven't learned about all these write-offs that Bill Gates and Donald Trump knows about. It's because that's something that is only meant for the wealthy. They put you out there to work, and you end up putting in the most hours at work, getting the most tax. It is a system. But if you know how the game is played, you can win. But if you never understand the rules to the game, there's no way that you can be a winner of it. You're always going to be the loser. So even if you think, oh man, look at me, I got a 6-figure salary and I'm doing this and that, chances are you could have saved a lot more of that money had you structured your income through a different account just by knowing the tax setup. I told you guys a little bit earlier on this broadcast, you get taxed less for making passive income through an investment account versus you having a check through a 9-to-5 job. Malkia said, Rich Dad, Poor Dad gives us the game too. Absolutely. Absolutely. These are all things, guys, that we got to be up on. All right. So, man, y'all know, as with every episode, I try to do my part to help y'all level up and invest. So if you want to get these 5 free stocks, then check out the link in the comments below. As y'all know, the Uzziah Show is sponsored by Webull. Webull is one of the fastest growing financial brokerage companies in the world. On Webull, not only do you get to invest in stocks, you also get to invest in cryptocurrency. And let me tell you guys one of the things about this, which is beneficial too. The reason why I like using Webull, especially as an influencer, is because when Webull sponsors me, they're not going to send me money. I'm going to get stock just like you. So I don't have to worry about, oh man, it's tax season. Let me now have to talk about all these taxes from income that I got from all these different places. No. My job is to make my income at a threshold that sustains me. All of the other forms of assets that I create is coming in non-liquid forms. What I'm saying, guys, is if I want to make more money, I'm not going to make all of my money through cash. I'm going to make more money in the appreciation of my real estate. I'm going to make more money in the return on investments in the stock market. I'm going to find other ways that I can raise my assets without being taxed for every extra dollar I get. If you only have one stream of income and that's only in the form of cash, then you are getting taxed at the highest rate possible. I want y'all to stay up on this. This is the reason why, as a business owner, You can be worth millions of dollars without actually having millions of dollars in the bank. Why? Because your worth will come from the valuation of the company. These are other ways, guys, in which you can build up your net worth and create generational wealth without being taxed so strong. Okay. So I pray that y'all got a lot of edification from this, man. I pray that y'all got a lot of good gems. How many of y'all enjoyed tonight's broadcast? How many of y'all took one thing away from this that you're going to really use? In fact, I want you guys to leave me a comment below, and I want you to let me know one thing that you're going to start applying from tonight's broadcast in 2022. Of the 6 different ways that I showed you how to avoid taxes, which one of the 6 are you going to use? So that way you can start to keep the money in your bank account. It's time to level up, y'all. We got to do better. And if you guys want to start figuring out how you could work with me further, I'm going to give you a link so that way you can book a private session. Okay. So all of my hours are on the schedule. All you got to do is click the link. If you want to get together with me for a private one-on-one session, then please make sure that you do so. All you got to do is click the link and then put the time in my calendar. Malkia said he's going to start getting up on these gift receipts. That's going to be a big win for him. Shout out to Malkia for doing that, man. Hey, whichever way that you could use it, feel free to do it, man. Listen, guys, and I think this is something that's especially important for our culture, and I'll leave it at this. I think that a lot of us within our culture end up kind of getting less than we deserve, all because we don't understand how the system runs. We don't understand how the laws work, and because of which we never use the law of the land to the best of our ability. There are tax laws. There are credit laws. There are all kinds of laws and codes that the top 1% of people use in order to raise their income and build wealth. But because we shy away from all of that, all we do is just go and just work, and then we go home and we don't realize there's so many opportunities that we're leaving off the table. I told you guys before last week when I was on here with Yasha Allah, there are credit laws where you can legally remove items off of your credit report even if you were guilty. So if you had late fees on your account, you can still have those late fees removed even if you were in fact late. You just need to understand how the credit laws work. And that's my job on this broadcast, y'all. I just want to be your brother and educate you on all these things so that way you don't just become victim to it. Because what a lot of y'all will do is y'all will say, oh, I don't need to know about none of that. I don't care about it like that. But then y'all will end up wanting to buy a house and then be mad when you don't have credit to qualify for a loan. If all you guys did was just follow after the things that I'm telling you, you would be able to get the things that you want out of life that much easier. It can come to you easier and faster if you simply know how the laws work. So I want to give a big shout out to Sheer Queen says, I would love to learn more about the credit laws. Yes, I actually have an entire program on this, Sheer Queen. I need to be on the lookout for that coming soon, Sheer Queen. Coming soon, coming soon, coming soon, coming soon. It's called Build Your Credit Video Vault. Okay, I have an entire program centered around how you can get rid of late fees, delinquencies like medical bills, foreclosures, bankruptcies, student loans, all kinds of things. This program walks you through how to be able to clean up your credit from top to bottom, regardless of how bad it is, as long as you understand the credit laws and you use them to your benefit. Okay, there are a lot of things in this country, guys, that We don't actually realize, because we were just taught how to be obedient, that there are certain things that you can actually do to your benefit within this country based upon the laws. So you are, in other words, what I'm saying is you are legally able to remove items off of your credit report, even if there's some kind of validity behind it. You just have to understand how the law works. This is the reason why there are credit attorneys, okay? I'm going to give you guys all this game. Just stay on the lookout for it. Make sure that you tune in into this show, guys. And if you guys enjoyed tonight's broadcast, then please make sure that you smash that like button, and please make sure that you sponsor the show, guys. All right. I go in hard on this thing 6 days a week, from Sunday all the way through Friday. Any donation and any support will be very, very appreciated as we keep this show on air. I cannot keep the show on air without your support. I do want to give a big shout out to our sponsor for tonight's broadcast, Sister Pecloria. Shout out to you. Y'all, let's continue to support y'all. Even if y'all are watching this broadcast after the live stream is over, please look out for your boy, all right? Wasn't a lot of donations tonight, but hey, this week is just getting started. You can give a donation through Cash App or PayPal. All you got to do is click the links in the description below. Now, y'all, please make sure that you share this broadcast so that way you can show others how they can lower their taxes. And as always, guys, please make sure that you subscribe and turn on the notification bell so that you can get an alert anytime I do another show. Like I keep telling you guys, I'm on here almost 6 times a week. And when you get the alert on your phone, after you turn on that notification bell, it'll tell you when I'm live. I usually do all of these broadcasts anywhere between 7 to 8 p.m. time frame, Central Standard Time. All you got to do is subscribe and turn on that notification bell so that way whenever I go live, it'll tell you and you can hop on. Listen, y'all, I love you. And I pray that you have an excellent week. Tell me about some of the things that you guys are going to do to level up in the year to come. And I'll see you guys on the next broadcast. Until next time, keep